I was having this chat over lunch, a question that comes up that I get pretty often is, should I buy now? And I always answer with the same thing, which is the fact of the matter is the right time is always the right time for that individual person. I mean, nobody really should be timing the market. Nobody should be timing the stock market. Nobody should be timing real estate either. But one thing that does concern me is when the question comes up about, should I wait until prices fall? And I think, first of all, I'm not of the mindset that prices are falling anytime soon. We are absolutely seeing a little bit of a leveling out towards buyers, which actually makes this a lot more of an attractive market for buyers because of that reason. We're not seeing as many all cash offers, multiple bids, and snapping things up. So for the average home buyer right now is actually an excellent time. But I was having this chat, and one of the things that it blew my mind is that when interest rates go up 1%, purchasing power decreases 11%. Now, what that means is that if at your current income level, you qualified for, let's say, $1 million home at 4%, if rates raised all the way up to 5%, that purchasing power is, you now qualify for 889 instead of $1 million, which is an 11% decrease. And because of that, if prices theoretically fell, which in this instance, we're really not seeing that unless it's the high end, $5 million plus. You are actually going to be losing money in the long term by not locking in a lower interest rate than you would be otherwise. And that really struck with me. I mean, put aside the whole fact that markets are evening out to be a little bit more on the buyer side than they have in the past 8+ years. You just put aside the fact that there are less buyers looking during the holidays, which means that the winter season does tend to be a better time to look if you are a serious buyer. There's just less competition. But think about purchasing power decreasing. And the fact of the matter is that interest rates were as low as about 3.5%. In fact, back when I was qualifying, we qualified for about 375, and those were like historic lows. I mean, right now we're already pushing above 5%, and many people think rates are going up, and that means higher monthly payments. That just means higher monthly payments because money is more expensive. So, look, if you're waiting, I'm not going to tell you that you shouldn't wait. But you may consider over the long term going ahead and getting in the market now, or at least in the near future.